Today, I'm going to dive into my dividends portfolio and see exactly how many returns I've earned investing less than $5 a day for 2 years. We just recently passed the 2-year mark of investing in this portfolio, and I invested less than $5 a day, more like $3 to $4 a day. And we are up a lot, up 38%, $698 in earnings. So we're going to dive into, break that down a little bit, look at what I invested in, how much I'm getting paid in dividends. Just for owning stocks, I get little paychecks. We're going to dive into what those look like and just see where we're at and how this journey has gone. So hit that like button down below, hit that sub button, and we're going to jump right into it. Okay, so I invest on the platform called M1. It is a mostly free platform. It does have a $3 a month fee if you invest less than 10 grand. But I'm more than happy to pay for that because of some cool features. So you can see here, to break it down, just an overview, I'll give you guys an overview. I have $23 in cash that's not invested sitting in my account. And then my account is worth $3,397. So, 3.4K. And $700 of that is returns on my money. So I've only invested $2,700, yet it's worth $3,400. I have a 38% return on my money. This is what it's looked like from start to end. I started investing around July 23rd, but really didn't start any major contributions until around September, which is why I'm making this 2-year video right around here. And we're fast forward 2 years later, it's gone up. There's been a couple dips, like right here, and then right here, and then right here. There's been some dips, but overall we've made money. So let's see here. Dividends earned, I've earned $111 in dividends. So $587 in what I've made has just been from the prices of the value of my stocks rising over time. But $111 of that is just the earnings from owning my stocks, getting paid out dividends, which is super cool to see. Something else I want to share real quick. Take a look at this. If I would have invested in everything I'm doing now, done nothing differently, simply started earlier, 3 years earlier, I would be at 145% on my money, meaning that 10,000 would be 14.5K now. 100,000 invested 5 years ago would be 145,000. 1.5 times my money. Super cool. We can also see here that my account gives a dividend of about 2.62%. I earn 2.62% returns each year in the form of dividends. So I have different sections. So let's look at my holdings first. This is what I own. I have invested in JP Chase, which is Chase Bank. I invest in SMH, which is a little more complicated. It's a fund you invest in, and the fund takes your money and invests in a lot of different semiconductor stocks. Caterpillar, which is construction. Kroger, which is the grocery store. MasterCard, which is a huge chunk of the credit card oligopoly out there. Microsoft, Apple, Costco, Texas Roadhouse, VU and VYMI, these are also mutual funds that invest in the whole market. Aflac, Main Street Capital, McDonald's, Waste Management, which does trash, schd, which is a dividend fund, Eli Lilly, and Target. So a lot of household names. And then we can see how much I've made on each of these investments. JP Chase alone has doubled my money. I got in at $65 and it's worth $155. That's more than double my money. So I'm up 101% on my Chase investment. 56% returns here, 50, 45, 40, 35, 35, 26, 21, 20%, 19, 15, 13, 9. We can go all the way down to break even on Waste Management. And then I am down by 10% on my Eli Lilly investment. I spent 115 on Eli Lilly, and it's now worth only 104. I spent 118 on Target. It's now worth only 90. I'm down 24%. My Target investment. It's unrealistic to have gains in every single stock pick. but these two, I'm still going to buy and hold on to for the long term because I believe wholeheartedly just in their companies and what they're doing. I think that they are moneymaker machines. Eli Lilly, especially. Target, I just think is not. I think Target is still trendy. People don't think it is. Wall Street doesn't think it is. Wall Street thinks it's the next like Marsh or retail store just to get out of here, like Macy's. I don't think that's the case. I think Target is popular with the young generation, and we'll eventually see that in the stock price. So those are what I invest in. And now this is a few stocks, right? This is 18 picks. So I sort these into different categories. I put like stocks together. And those categories on M1 are called pies. So if we go back to my portfolio screen, we can see I have a pie called core, growth stocks, tech, financials, industrials, grocery, restaurant stocks, income and bond stocks, and healthcare stocks. And so the next thing we're going to jump into is going to be the dividend returns. Let's look at what dividends the account has earned me all time, and then also this month. First year of investing $5 a day or less, I got paid $11.92 back from my stocks in the form of small checks that I can withdraw if I wish. And then in 2024, I got paid $56, so a lot more. And then we are only halfway through the year, a little over halfway through the year, and we're at 32. So I think maybe 60s or 70s is going to be realistic for the end of this year. And that's an average of $1 a month, about $5 a month, and hopefully $5 to $7 a month here. The goal is that I get paid in dividends, but really I want to have this be a part of my nest egg. So when I hit retirement age, this brokerage account is paying a monthly dividend payment so significant that it, again, it could cover groceries or something maybe even bigger like paying for my health and car insurance or something like that while still growing. That's kind of the goal there. But in the month of August alone, I've earned $1.64 in dividends, and that's from a few different stocks. We're going to look at which ones paid me here. We can see that I deposited $40 this month, or $37 after they took out the fee. And then I bought $10 of Target, $21 of Aflac, and $6 worth of Eli Lilly. I sold nothing. MasterCard paid me 17 cents, which is what they paid me last time. Apple paid me 13 cents, which is also what they paid me last time. 15 cents from Costco, and 46 cents from Main Street Capital, and then also 73 cents from Caterpillar. Now, previously Caterpillar did pay me 68 cents, so that's a 5-cent increase or a 7% change. So all in all, $1.64, which is an increase of 5 cents from the last time these stocks paid me, and a growth of 1%. So that's the dividends I earned this month, $1.64. Nothing crazy, but this is a piece of the solution for getting some returns, right? Some of the returns are going to be from stocks growing, and some are going to be from these dividend payments. So really excited about that. So on the div tracker, we can go to my M1 dividend portfolio. It says that we are on track to earn $70 a year in dividends. That's $5.82 a month, $1.34 a week, 19 cents a day, 1 cent an hour. And then we can look at the investment returns visualizer, which just looks like a lot of information. Don't get overwhelmed here. Just look at this chart. This is the average rate of return on my different investments and how they've been performing. We can see that these have been neck and neck since I started recording in January 2024, but there's been some clear winners and some clear significant changers. We can see that the purple line for Bitcoin has been really dramatic because that investment is very speculative and Bitcoin just goes crazy. So at one point it was matching the others, and then it became a terrible investment, and then it shot back up to be a great investment, and then back down towards terrible, and it's been all over the place. But overall it's evening out to be a worthwhile competitor with the rest. We can see that gold has been steady and then shot up in early this year, and then kind of dropped down and leveled out with the others. We can see now that the returns for Bitcoin match the market, matching my M1 portfolio, matching gold. They're all competing right around the same amount of returns. which is right all around that 37% returns since 2024. The weird outlier is my Roth IRA account, which is one of my retirement accounts. It has like 3 stocks in it. It's not really for fun. It's really just to sit and grow. Probably one of my more boring portfolios. It's like VOO. It's like the S&P 500 mutual fund. It's an international mutual fund, and it's Google, and that's it. Well, that one is not doing as well as the others. It's actually at a 25% return versus 37% on the rest. So it's got some room to climb up. But like I said, everything is neck and neck, and it's going to take more time of this visualizer to really see how everything branches out. Over time, we'll see that compound effect happen, right? And we'll see how these separate and how it goes from there. So yeah, appreciate you guys watching the video. It doesn't take a lot of money to invest. My account, it's only at it's at $3,300. I only have $3,000 in it, and I've been investing for 2 years, like $3 or $4 a day, 20 something bucks a week. It's totally possible for you guys to invest. You don't need a lot of money to invest. You can get returns. And now I have $600 in returns, and this 3K, I want to keep it in here for as long as I can. If you're new to the channel, I make videos on this portfolio every single month with updates. Have been for almost 2 years. So hit the sub button, hit the like button, stay updated on what's going on, get some inspiration, figure out why I picked the picks I have, and learn a little bit along the way. So thanks guys, see ya.